Hello, it's Tuesday the 28th. I'm FxPlew and this is the market brief. So Andrew Bailey's been on. He said that the current outlook for the UK growth is the weakest in his lifetime. He also suggested the idea of sustainable low inflation growth is not going to happen anytime soon. While this has drawn plenty of criticism, official data tends to agree with his view. Most projections report low to no growth next year and only a modest improvement on that in 2025. Nevertheless, where inflation remains so far above their target, it's far too early for the MPC to be having any serious discussions about rate cuts. This is the position of the Office of Budget Responsibility too. They forecast inflation will be much more persistent over the next 12 months than had been previously expected. So any optimism around the corridors of Westminster after Hunt's autumn statement last week looks to have been rather short-lived. Back to reality with a bang then. Now, over in the US, the Fed has done a pretty good job of things this year. Tackling inflation was their primary objective, and avoiding a recession was probably number two. That might have been joint second with laying the foundations for sustainable low inflation growth and reliable job creation in the economy, but you get the gist. Chuck in the odd curveball like stopping contagion from the collapse of Silicon Valley Bank and Credit Suisse and avoiding a run on the regional banks in the US, they've done a pretty good job, all things considered. Inflation has fallen to a point where the Fed has been able to pause the rate tightening cycle, and a soft landing, well, it looks like it could be on the cards. Of course, the constant recession risk does still loom large and is still considered a genuine possibility, so let's not get too carried away there. But we do have the latest estimate for Q3 GDP this week. That may be revised up to 5% from 4.9%, which will provide a bit of a boost to market sentiment. In the market, meanwhile, the belief that US rates have peaked has caused a correction to the dollar. Yesterday, sterling reached a high of 126.45 against the dollar as the dollar index fell to 103.20. For what it's worth, the chartists are eyeing up support around the 103 level now. We kick off this morning from around 126.20 against the dollar, 115.30 against the euro, and euro dollar is around 109.45 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.